Good solid show by the markets, broader markets in particular, but the large caps are not disappointing either. About 0.25% for the Nifty 50. I want to mark the VIX once before we talk about anything else, because that was the standout in trade yesterday in today's session, just about lying flat there. So no big changes in the India VIX as well. And if you just look at what's really driving the markets higher, look at the PSU index, look at the metals index. That bucket of stocks at the broader end of the spectrum is doing really well. Nifty Metal is up 2.6%. The PSU space is doing really well for itself. And the mid-cap and the small-cap indices are doing well. So the market breadth, which will come up on your screen next after the mid-cap and the small-cap indices, will show you that it's been decent show for the index by and large. 0.88% for the small cap, and for the markets at large it's been a decent show because the advance decline ratio is still firmly in favor of the advances. Now, what's moving and what's not? Let's get the heat map up on the screen. Let's start off with the losers, and there is a decent measure of losers as well, but Tata Consumer has stayed low for the entire trading day today. There's a bit of a weakness in Tech Mahindra, Titan, TCS, so that bucket of stocks, consumer and technology, have had a bit of a hit, and ICICI Pru has brought about a bit of a pullback into HDFC Life and SBI Life too in the session today. What's done well? Metals, unequivocally, and some bit of pharma. So look at this, Hindalco, Tata Steel, JSW Steel, it's Metallica all the way. Cipla has individual stock specific news, that's up 3%. There's strength in Kotak Bank in the session today, NTPC, Ultratech, L&T, a lot of economy facing stocks too are doing well in the session. So all in all, good solid day, more so for the broader end of the spectrum, but you have to admit the kind of moves that metals and PSUs are making is quite breathtaking, Tamanna.
Absolutely, and you're right, the broader end of the market also doing very well. The mood completely changing mid-trade. Let's pull up what the mid-cap 100 is doing, and almost a percentage point up. The small-cap index also up in the green, but specific stocks that we want to talk about, and on both sides, let me talk about the losers first, and I must mention Vodafone. The FPO will list tomorrow. A day before that, 7.5% down. Is the street expecting a lot of large marquee investors who came in to dump the stock? Is that the anticipation? Why this kind of a down move in a Vodafone? We'll talk about that later in the show, but that's definitely one stock you must pay attention to in terms of the move. A lot of reactions to numbers. The street completely punishing an ICICI Pru. Apart from the CLSA downgrade to underperform, of course, margins were hit. Tata Elxsi, another disappointing quarter. Profits have also come down. So nearly 5% down on a Tata Elxsi. On the other hand, look at a 361 WAM. And again, when I talk about earnings impact, that's a complete positive over there. I don't know if you can pull it up quickly, but a Nippon Life, that same category, all capital market facing kind of stocks are doing very well, and that's because of the huge amount of interest that there is. And a spike in Nippon Life, we'll pull up the intraday chart later in the show as well, but spike in Nippon Life after the numbers have come out, and very strong numbers. Profits are up 73% year on year. Some others in that category, I would say, are Tejas Networks. Again, good numbers, but a bit of profit booking over there now, after 2 days consecutively of gains. Metal stocks in focus, definitely. There is a note out which talks about how the commodity cycle is going to be in an upswing, and you're seeing a sale doing fantastic, 7.5% up on a sale. NMDC also very, very strong. So you have really some spots of brilliance in this market today, and all of it, Niraj, what I was noticing is very clearly about the numbers. No tolerance, zero tolerance for even an outlook that seems negative. Like a Tata Consumer, after the con call, you've actually seen that stock dive down even further.
Started low, stayed low, no sign of an uptick even tried for. So in that sense, that's true. But on the flip side, some of the stocks which are showing some promise are getting bid up very, very strongly. Well, the market keeps on climbing the wall of worry, and currently is no different. Jay Bala, founder and chief market technician at Cash the Chaos, joins us on the technicals, and Vijay Chopra, MD and CEO, Enoch Ventures, joins us on the fundamentals. Gentlemen, great having both of you. Thanks for taking the time out. Jay, good solid move, really. I mean, we still not eclipsed those levels which will warrant a short covering on the options side. So maybe that is still in the offing. And VIX, the way it's dropped off quite significantly in trade yesterday and no bounce back today either. Are you taking long trades on the indices?
Hi, Niraj. Good to be here. No, I'm not taking long trades here. I believe this is likely to be a trap. It's got something to do with the global markets too, and also got something to do with the Indian markets. The Indian markets could, in the extreme short term, slightly outperform. So I'm a bit, less negative on the Indian market. But even then, if it were to outperform, it will not be a lasting one. It will be a fleeting one. So I'm avoiding longs here, and I'm being very specific on the longs. If I'm long, it's going to be very specific. So as you rightly pointed out, it doesn't warrant a breakdown. It's come very close to a significant support at 22,710. It came to 22,770. Once those levels start to break, then I will completely avoid longs and start to get short.
Okay. So no Nifty longs, in which case, is there a trade on the indices? And if not the indices currently, are there trades on specific stocks, Jay, that you're taking today?
Oh, definitely. If you look at certain pharma names, they're doing quite okay. If you look at something like a Torrent Pharma, it's been a relative outperformer within the pharma space. So I like Torrent Pharma here, and it's got an incomplete objective somewhere close to 2850, 2900. So stop loss below 2490 would be ideal for the stock. And I'm also bullish on Navin Florian from last week, and I'm slightly negative on PI Industries. PI Industries has got a potential to drop somewhere close to 3100. A stop loss above 4040 would be a sensible price action. And another stock I'm bullish on is Rajesh Exports. It's had a steep fall from the last several months, and the recent bounce from the low of about 262 has got potential to hold, and this can go all the way to 1,000. But given the environment we are probably switching into, I would keep an objective somewhere close to 400, 420, and keep a stop as about 280 or even 262. 280 itself is a good stop, but if you want to be more conservative, 262. The short-term potential is 400. If it were to develop into something bigger, the longer-term potential is 1,000, but you should need to lighten up around 400 mark.
Vijay, good afternoon to you too, and great to have you on the show. I just want to get your take on the whole metals story and the kind of excitement we're seeing with metal stocks this afternoon. Of course, a note out there which is fairly bullish on the commodity cycle, but metals in general and SAIL in particular, would you be constructive even at these levels and even right now? I think you're on mute, Vijay.
Extremely sorry. So I've been advocating buying into metal since almost COVID times. And, I remember very clearly that the likes of Hindalco, Tata Steel, Nalco, I recommended at 40, Hindalco at 240 odd. And, all these metal companies looked great. And whenever the world goes into a crisis or a war, the commodities definitely support and they go up. So what I see is that we are in a long-term bull run, especially in metals. If you look at copper mines across the world, they are trying at the rate of 2% per annum. So I am giving a statement, sticking my neck out that, copper might be the next gold. We might see huge upside in copper. So yes, there would be corrections which would come our way. But again, in the longer term perspective, I think that metal companies should do well. The companies I've mentioned, Hindalco, Vedanta, National Aluminium, Hindustan Copper, these companies should be bought in a correction. And similarly, SAIL, again, a great company, great PSU. The way it has moved up, I think that, it's not a time where you just jump and buy into a stock. So I would say just hold your horses for some time. Even the likes of NMDC, GMDC, NMDC Steel. NMDC Steel, I started recommending at around 30. So again, I in a correction, I would buy again all these metal stocks, maybe with a 5-year perspective. But yes, the kind of steep run up which we have seen in metals as of now, I would love to stay away. I think that it's high time that we should try and buy IT at this point of time, or select FMCG stocks. So I think Tata Elxsi is a good buy at these levels, 5% down, but again a quality company, and it comes from a Tata stable. So I think that the companies like Tata Elxsi can be bought into, TCS, HCL Tech, they can be bought into. The likes of Hindustan Lever can be bought into. The likes of Kotak Bank and HDFC Bank can be bought into. So no point of unnecessarily jumping and having a FOMO kind of a feeling that we have lost it. No, in a correction again you can buy all these quality companies which I have mentioned. But yes, I think that if at all you are having good profits on the table, take those and get into companies which have not moved up. I think technology is one sector which I think should either it has bottomed out or it's in the process of bottoming up.
Jay, just your take on some of those metals counters, and we talked about a SAIL and an NMDC, but really the entire index is having a supreme day. Do you see a further up move?
We discussed Hindustan Copper last time, and I was bullish on it, and it's come up to short-term objectives. And there is short-term upsides for metal stocks, but I think this is coming very close to a cycle top. This cycle top, and that will probably coincide with the euphoria in copper. I believe copper has got very very little upsides left, contrary to what many people think. There is lower probability that copper will scale all-time highs, and even if it were to, that will be a fleeting one. And so the short point being there is very limited upside for metal names. So I would be a bit more cautious. I would be focused on lightening up and going to cash and probably switching to other sectors if possible. But otherwise, I would not create fresh longs in the metal space.
Okay. Now, one reason why there is some excitement on metals this afternoon could be this CLSA take on metals, where they say the Middle East conflict, the macro environment is what is driving the commodity cycle. They're positive on base metal companies on high backward integration and domestic sourcing of key raw materials. As far as CLSA is concerned, they see Hindalco as a significant beneficiary. We should just look at Hindalco stock. In fact, if we can pull up Hindalco the last 7 days. So CLSA likes Hindalco. They say they will be a significant beneficiary of higher aluminum prices, and that stock has been doing well. They also believe the multi-commodity exposure should bode well for Vedanta. So that's the other one that we should look at. Spot steel prices now at 5 to 7% premium to import parity from China FTA countries. They see limited spread expansion in MTM analysis for iron ore and coking coal prices against assumptions, and FY26 EBITDA upgrade is what they have given for a JSPL at 14%, Tata Steel at 10%, and JSW Steel at 1%. So that could be one of the reasons maybe that you're seeing that metals spike this afternoon. But it's not just metals. There is so much more to talk about on the show, and we'll take a very quick break. We'll be right back with all the companies that have responded very, very well, in some cases very badly, to their quarterly results. What should you do with this next? What's the take on Vodafone? All of that after the break. Welcome back. We're talking about numbers and let's put the spotlight on Nelco. PJ Nath, the MD and CEO, is with us on the show. Mr. Nath, great to speak with you here on NDTV Profit. I'm just looking at your Q4 numbers and can you explain why it's been, at least on the face of it, a bit of a rough quarter? Revenues down 2%, EBIT margin has also gotten squeezed a bit. So have profits, fairly limited, 0.8%, so not greatly down, but on the downside. What is the reason behind this?
I'm not too sure how you're seeing downside, because I look at the whole thing quite differently. We look at the business on a year-to-year basis, because every quarter is not an exact representation of how the business is doing. So if I were to look at from a year perspective, our revenues have grown by 2%, which is low, I agree. But if you really look at our profits, they have grown by 20%, which is quite healthy over last year. Our return on ROC has gone to 29% from 26%, which was there last time. So the overall, I think the company has become much healthier. Except for the fact that the revenue growth was muted for this financial year. So, but overall, we are very bullish on how we have done. We have made a lot of investments.
So I agree with you, Mr. Nath. Consolidated year-on-year, your revenues are up 2%, your net profit is up 20%, your EBIT margins are still a little squeezed. So
yeah, I had said that our EBITDA levels are about 90 to 20%. So it's in the same. Yeah.
Yeah, so slight drop over there. So do you see the margins remaining in this range going into FY25 as well?
Yeah, the margin will not go down below this. The margin will remain at similar levels. We expect the revenues to go up significantly. The reason the revenue were lower last year was because some of the larger projects which got delayed due to external factor market conditions, and that will happen. So during this year, that will come over and above that, whatever the natural growth that we were expecting in FY25 would be there. So we are fairly bullish in terms of the revenue growth during this year. But as a company, we are very, very happy that our balance sheet has become so much stronger. We are financially much stronger than what we were earlier.
In terms of where you think those revenues are going to improve, is there any sort of guidance or outlook that you can give us? You're saying revenues are going to become healthier. What space is that going to come in? Because I know you also have a defense exposure, and a lot of companies we speak to who have any kind of defense exposure have had a fantastic year. That's where the order book is really bumping up. Give us a sense of where you stand in that context.
Yeah. First, let me just give a perspective that, as a company, we used to be in the security surveillance segment, which used to focus on defense, but we exited that business quite some time back. We've tapered it down. We are entirely into satellite communication. That's the first point. In satellite communication, we are into three different markets: the entire enterprise market, enterprise and government, in-flight communication, which is aircraft communication, and maritime communication. We are there present in all the three segments. We see growth in all of them. In fact, for FY24, while our overall revenue is only grown by 20%, on in-flight and maritime, we grew by 20%. So that's been a flagship for us, and we'll be growing quite aggressively on that. But therefore, this year, we see the growth coming in both enterprise market as well as in-flight and maritime communication, which has been a fairly steady market segment for us. So that's where we are. We are not into the security surveillance business anymore, and we've tapered it down earlier.
Mr. Nath, good afternoon. Niraj here. Good talking to you after a while. I heard you use the term that it will be stellar growth, or maybe a different term. Is there a quantum that you're laying out to the quantum of revenue growth that you will do for FY25?
No, we don't give. We have our internal plans, but we don't give any guidance in the market. Suffice to say that FY25 would be much better than FY24 in terms of the revenue growth. Because when we look at FY24, but for the revenue, we see that everything else is quite healthy for the company. So that's the only thing, and which happened because of external factors, some of the contracts not coming, and that will happen this year. So we'll be back on stream in terms of the revenue as well. And overall, the reason the profits are high is because our operational efficiency has gone up significantly. Our quality of contracts have improved. While the revenue has grown by only 20%, our recurring services has grown by 11%, which means only the new equipment sales have come down, but recurring services, which are more profitable and more steady, have grown much better, about 11% plus. So therefore, overall, I think we are fairly bullish in how we performed last year and the kind of where we are right now to go forward. Also, the new space policy is very positive. It is giving boost to the private sector. The new telecom policy is also good for the satellite industry. The main thing being that satellite spectrum would be administratively allocated, although we need to see how will it be exactly implemented. So overall, we feel that all the external factors are also fairly positive. So therefore, FY25, FY26, we see to be good year for us.
Okay, but you're not laying out a number. It could be northwards of 15-20% revenue growth possible as well.
Yeah, I'm not laying out a number at the moment.
Okay,
yeah.
but is that far-fetched, or that is something that could happen over 15-20%?
Well, as I said, let me say that we'll be doing much better in this year. Let me not give a specific number. Yeah.
Okay, fair call. Yeah. Just one quick question, Mr. Nath. Another quick question is, this FDI in space, does this in any fashion impact you?
No, it doesn't impact us, because the way we see that FDI in the space, that will only help some of the international players to start investing in this sector in the country, which is positive for the industry as a whole. So we welcome that change. We don't see in fact, we see a positive impact for the industry as a whole, because we believe that as the industry grows, all the companies have a better chance to grow. So it is positive.
I'm wondering, Mr. Nath, I mean, Musk has postponed his visit, but and now he's fixing Tesla. But before that happened, there was a lot of buzz about, whether there would be some Starlink announcement, etc. As we're opening up this space and more players want to come in, how does that work out for a Nelco if we have that level of competition within India?
See, we have, I've said it earlier, that we are technology agnostic. We are not fixed to any one specific technology, be it in terms of electronics or in terms of the satellite type of satellites we use. So we've been now working on geostationary satellites so far, because geostationaries were not there. Now the geostationary satellites are there. There are multiple LEO satellites will be coming into the country. So we'll adopt the type of satellites that are required for addressing our customer requirements. So to us, it is a positive thing that all the newer technologies are coming into the country, and as a service provider, we leverage all of them. So that's how I see it.
Okay, so whether it's One Telenet or Starlink makes no difference to you?
Yeah, I mean, there are multiple of them coming, and there'll be new, there are still some new startups, which I can't talk of now. Right now, we're talking about coming up with what we call an NGSO satellite constellations, and we are watching that space very carefully. We are in serious discussions with multiple such players, and we'll, adopt the one which is most suitable for our customer requirements, our markets.
Business opportunity for you as the space opens up?
Absolutely. There's a lot of opportunity.
No, so if you can be more specific, sir, apart from a lot of opportunity, what is the kind of business opportunity?
It's like this, when we say satellite communication, it addresses multiple use cases. There are certain use cases which are better on geo satellites. There are certain use cases which are better on a LEO satellites. So therefore, today, some of the applications are not possible on a geo satellite because of, let's say, I'll just give one dimension about the latency being higher on a geo satellite as compared to a LEO satellite. Once a LEO satellites come in, we'll be able to address that, which means the market expands. So that is one angle. On geostationary satellite itself, there are new software-defined satellites coming, which makes the satellite far more adaptable to your changing requirement, which helps you to go more closer to the customer in terms of the kind of use cases that you can handle, the kind of cost reduction that you can have, etc. And which actually helps in terms of expanding the market. And that is why we say that, look, all these things are positive for us as a satellite industry, satellite services industry, and then we'll be leveraging that.
All right. Thank you, Mr. Nath. Always great to catch up. Nelco, they're talking about their numbers. The numbers on the face of it did not enthuse the market, though the outlook as far as the management is concerned is bright. Stock is about 4% down. Their margins have been completely flat. In fact, down, I think, by 1% or so on a consolidated basis. Q on Q quarter has been a bit rough. But they're saying they're very positive on the maritime segment. Meanwhile, a quick look at what's happening in the markets, and IT stocks seem to be in a bit of pain. I want to pull up the indices, the sectoral indices, just to give you a sense of what's working and what's not. If at one end of the spectrum you have the metals that are doing fairly well, IT is definitely not the top losing indexes. IT, PSEs are also doing okay. Realty having a second consecutive good day. Very quick break, but we're coming back with more focused coverage on what's happening in the markets, BTST calls, and a lot more. Stay tuned. Welcome back. You're watching India Market Close, and Tata Consumers is a stock that is hurting today. The company came up with its Q4 earnings while top line growth and PAT missed street estimates. Margins did expand. However, the stock has reacted quite sharply, especially after the con call. Mahima is joining in for what didn't work for the company this quarter.
The stock is under pressure, it's down around 6% in trade today. Well, this is because the company did miss estimates in terms of revenue and PAT. However, margins have improved from 14% to 16%. Now, the PAT has been down around 22%, and this is because of a one-off loss that they've recorded, which is on account of the acquisitions that they've recently made. But the street is not happy with the kind of volumes that they've posted. 4% like-for-like growth overall is what they've posted in terms of volume. Their beverage business also did not post good volume in terms of percentage. It hardly posted 3% volume growth. Now, in terms of their ex-acquisition growth, it's around 11%. However, if you remove that, it's hardly 6%. So this is the reason why the stock is under pressure. Now, in terms of international business, it recorded a growth of around 7%. But overall, if we see the premium segment is something that contributes 2/3 to the total revenue of TCPL, and that is why the premium segment has been a bit under pressure, which is why why the Q4 results came out to be a bit, in terms of estimates, they missed beat. Well, in terms of margins have improved on account of the non-branded coffee business that they have, and also the weakness in Indian branded margins was offset by the international margins that have taken place. And overall, despite of all of this, the board has recommended a dividend of around 7.75 per share. So this is the overall view of Tata Consumer's Q4 results.
So stock down 5.5%. Vijay Chopra and Jay Bala with us. Vijay Chopra, HUL coming up later today. Tata Consumer not looked too bright, but in that entire pack, which would you prefer more? And would you look at a buying opportunity with a Tata Consumer right now?
Well, Tamanna, if you've asked me which is the better one, I think that, I would go with Hindustan Lever, which is much bigger company. And yes, the sector seemingly looks in doldrums, whether you look at ITC, Marico, Dabur, Hindustan Lever, all the biggies, they are just ruling under a lot of pressure. But I think that these are buying opportunities into quality companies. So if at all you want to buy into, the FMCG space, buy a HUL, buy a ITC at this level, 430 is a great level to get into a stock like ITC. Yes, Tata Consumer, I would say that, let the dust settle down. Maybe in a couple of days' time, Tata Consumer can also be bought into. But again, my priority would be that go with the biggies, with the big ones. The chances of going wrong are lesser there.
Okay. Well, am I reading it wrong, or do we actually have Chennai Petro doing what it is doing today? That stock should pull up Chennai Petroleum. That stock is up 16.5% on some massive volumes. The other one, MRPL, is up about 11.5% as well. So pretty stunning show by some of these oil and gas related names. And in between those is Aegis Logistics, and Deepak Fertilizers is number 4 on the list of the NSE 500 or Nifty 500, which are gaining. So quite stunning really what's happened here. Jay, coming on this, this rallies intermittent that we're seeing in some of these PSU names, or, so we have Chennai Petro and MRPL up today. For the last 2 or 3 sessions, we've seen Cochin Shipyard, Garden Reach Shipbuilders and some of the others moving too. How do they look on the charts?
Yeah, if you recall, Niraj, 2 weeks back, we had a call on MRPL and I had anticipated it to scale past 300. And it's not surprising for me. And Chennai Petroleum, unfortunately, we missed it on the show. But even that's looking as strong as MRPL. Probably it's looking more strong than MRPL. So with regrets that I'm sorry that I didn't identify it for your viewers. So most of these names still have pending upsides above their February highs. So, considerable amount of upsides on some of them. When it comes to Tata Consumer, there's a conditional short for me. You can take that as a conditional STBT. If it had to break down below 1080, it will be a completion of a head and shoulders stop for it, and it's likely to fall to somewhere close to 910, probably even 880. We don't talk much on macros on the show because our focus is something else. As an aside to this Tata Consumer, I'm expecting coffee prices to hit 2011 highs. So it's going to have an impact on coffee manufacturers. So, the coffee futures is currently trading about 220 odds. I expect it to cross 360s and later on somewhere close to, I think the 2011 highs somewhere close to 390, 400. So that's the international coffee price, coffee Arabica. So some negatives are likely to come through in the form of raw material prices for Tata consumers.
Okay. Well, we'll wait and watch, and we'll also wait and watch earnings. Now, other than HUL, Axis Bank earnings will be in focus today. And what is it that one should expect from these numbers? What is a key thing to watch out for? My colleague Harsh Johnson with that. Harsh, what would those 1 or 2 line items be, which would be the most important ones?
Well, 2 key pieces, Niraj. One is on the net interest margin piece. Now, margins have been under pressure. They were at 4.2% Q4 FY23. Currently, would be lucky, I feel, if Axis Bank does a 4% plus kind of margin. But if it does do so, then definitely the numbers will look much better, much healthier. So look out for that margin number. That's going to hold the key. largely brokerages and analysts are expecting a 3.9 to 4% kind of a number, and therefore margins even sequentially may fall marginally just by about 10 bips or so. So that's one key piece. The other one, Niraj, is with regard to both your advances and deposit growth. The Citi integration and how deposits are gaining traction will be the other key moving part which will be looked for. It's the general consensus seems to be that LDR will continue to rise, which is loan to deposit ratio, which means largely that there will still be pressure on deposits. Deposit growth will be slower than loan growth, and if that is not the case, if deposit growth is faster than loan growth, that may also be a positive catalyst. The last maybe piece is with regard to Max Life. Commentary around how the acquisition will go about, how quickly will it happen, what efficiencies will get built as the acquisition happens of Max Life will also hold the key.
Okay. Well, certainly watch out for Axis Bank in the session, or rather in the evening today and in the session tomorrow. Let's wait and watch if Axis Bank can do justice. By the way, the Bank Nifty should come up on your screen. 3 days on a trot. We were in the green, and I wonder if today is yet another day. No, not Nifty Auto, Nifty Bank. 0.5% higher. So above 48,000. And helping the markets for sure. So do keep a keen eye out for Axis Bank's numbers today, Tamanna.
Yeah, Axis is interesting. Vodafone is also very interesting. I mean, I just want to pull up that stock and over the last few days, what a seesaw, whipsaw completely for investors. Very, very volatile, down 8.5%, and it's nearly near its day's lows right now. But just look at that chart. You don't know which way things will go. Nevertheless, we have an exclusive story on Indus and what Airtel's interest in it could be. And Indus is something I want to pull up as well, almost mirroring what's been happening with Vodafone the last few days. Today down again another 3.5%. Smriti, my colleague, has this exclusive story that Bharti Airtel is looking to acquire a 3% stake in Indus Towers. What are the details, Smriti, and why is Bharti Airtel interested in Indus, and what does it mean then for a Vodafone?
Well, yes, Bharti Airtel is looking to add at least 3% stake in Indus Towers. Now, this comes on the back of a clarification that came this morning where Bharti Airtel said that they're going to at least have financial consolidation in Indus Towers. This essentially means that they want a majority shareholder in Indus Towers. Currently, Bharti Airtel is the biggest shareholder but still doesn't hold majority. Its stake is currently at around 48%. But Vodafone PLC is interested in selling that stake. Now, we're hearing from sources that Vodafone PLC may sell this stake and plow back those profits from that sale into Vodafone Idea. So it's a plus for Vodafone Idea as well. Now, if you look at Vodafone PLC's stake, it's currently valued at about 17,400 crores. And if Bharti Airtel is to buy this stake, at the current valuation, now remember, Indus Towers has run up about 24% in the last 1 month itself. So at the current valuation, they'll have to shell out at least 2,900 crores or thereabouts. So that's what's happening. We may see a consolidation happening in Indus and a majority shareholder in Indus, which is Bharti Airtel.
So just trying to understand, didn't Bharti Airtel give out a release that they do not want to hike their stake any further in Indus?
No, only until financial consolidation. So meaning that currently it's at 48%, so they will go up to over 50%. So 51% is that.
Okay, fair call. Smriti, thanks for that exclusive piece of news out there. And watch out for Indus Tower. And, telecom remains at that space firmly in focus. Bharti hasn't reacted today to that upgrade from Citi. I don't know if it's got to do with this shelling of, outlay of money that they might have to do, or maybe just that it's had such a good rally that it can take a bit of a pause.
It started strong, and then maybe a bit of profit booking. But I'm interested in knowing what our analysts for today think about Vodafone, because you have the listing tomorrow of the FPO. Kumar Mangala Birla is going to be attending it. We know that, and I mean it's an FPO listing at the end of the day. But he is going to be there as well. The concern is that will all of these marquee investors who subscribed and oversubscribed, look at this as an opportunity to exit because they came in at $11, right? And you've had some negative price action through the day. Vijay Chopra, I want to start with your take on Vodafone now near its day's lows.
Well, I think that it would be very, very difficult for Vodafone to come out of the blues because the kind of debt it carries, and the kind of revenues it's making and the kind of customer base it is losing every year. So crores of customers they are losing every year to maybe Jio or Airtel. They are not able to invest into new technology, 5G, 6G, etc., etc. So I think that, it's a dismal future until unless it goes into very strong hands, very well capitalized hands, which I really can't comment on because there are companies which are interested in buying over Vodafone. But as of now, I think that, I won't be a buyer in Vodafone. Although they had a fantastic FPO, they've raised some huge capital. But look at the response, the market has not given a thumbs up at all. So I think that, it's better to stay away, no fresh entry, and exit on rallies is the call.
Jay, your take on a Vodafone right now, is this an opportunity for a fresh entry? I mean, those who bought at 3 rupees and had a complete hope call at its nadir would be thinking that, they really stuck it out, if they stuck it out. At 13 rupees, do you see an upside here at all?
They have really done that. That's actually a phenomenal move in terms of percentage. But, as price structure stands right now, I even mentioned this last week or in our previous interaction, as long as the stock can hold above 14.25, 14.50, that'll be positive for the stock. But, the price structure is such that even if it were to do that above 14.25, it's going to go a little bit up and then taper out. So, there's not much upside I see for the stock beyond 19.20. So, limited upsides, and I don't like the price action. So I will completely avoid it. On the other hand, Indus Towers looks quite strong. So on pullbacks somewhere close to 320, that will be quite attractive for the higher highs to come through. Bharti, I've been bullish for some time, since November at least. But the upsides here too is slightly limited, say probably somewhere close to 1400. So if you have to arrange the stocks within the space in order of difference, for me it will be Indus Towers, Bharti, and then the bottommost Vodafone Idea.
Okay, well, that's Vodafone Idea. But Indus Tower, I just want to mark that stock as well, just before we move on and see what that one is done today. That one too is down about 3.5 at 349. So a bit of a pause, I think, for telecom at large in the session today. Something's up with Aegis Logistics though. It's up about 13.5%, 606 and counting now. But it's not just today. If you just look at the 1 month chart of Aegis, I think in the last 1 week, twice it has given this very large moves. And the 1 month chart will come up on your screen. You're up about 55%. So the LNG demand or the LNG terminals that it is operating, maybe some of them have gone on stream. But it's been a stunning move for Aegis, which is now trading at its life highs, I presume. Vijay, do you track Aegis Logistics?
Yes, and I've seen it on the charts as well, the way it has gone up tremendously. But I think that, as of now, I won't recommend any fresh entry. Exit is the call on Aegis. Yes, we have seen a fantastic move, almost from 400 to 600, 200 rupees move. But yes, I think that, it is done as of now. Even if it goes up, I won't recommend, buying at these levels. So better to exit on rallies and, wait for some correction to get into it again.
Business update on United Breweries, and the stock is responding quite well. Heineken has said its net revenues in Q1 have grown by 20% organically. Look at the spike on UB this afternoon. This is driven by volume and a positive price mix. They've also said their premium portfolio grew volume in the low 20s, led by Kingfisher Ultra and Heineken Silver. So, when you're looking at perhaps a hot summer and all of those stocks that perhaps will do well, beverages, etc. Anyway, premiumization in this space has been good. But UBL showing a very sharp move. Jay, any views on a 2035 levels right now on a UBL? Would you enter at this point?
As a trader, I'll definitely enter here because this is a multi-year breakout, a multi-month breakout, not multi-year breakout. But it's got. In fact, I'm even contemplating, buy today, sell tomorrow on this. But it's just generally tends to be a bit volatile on intraday time basis. But yeah, it's still got much more upsides to come through. This is a big breakout. If it were to pull back somewhere close to 1960, that'll be an excellent entry point. I would imagine on upside somewhere close to about 2200 in the short term.
2200 as an upside, a possible BTST candidate for Jay Bala as well. 1960 is the level at which he'd like to make an entry if that's an opportunity. No opportunity today, very clearly. Stock has been up, over 40% in the last 6 months. Vijay Chopra, you like UBL?
Contrary, I would say that, it has moved quite a bit. I'm a bit wary of the kind of moves stocks are having nowadays, sudden spike. And I'm actually afraid, when we see a sudden spike in the stocks because, there's a retracement as well. And, poor retail investors who are new in the markets, they generally get caught up in the frenzy, and buy these stocks. I would not recommend. In a correction, yes, if I get it again at around 1800, 1850, it would be a great buy again. But as of now, I think that there should be some kind of a retracement. So why to risk your capital at these levels?
So Vijay Chopra says he's afraid of these up moves, but dar ke aage jeet hai, although that's a very different drink, not what UBL puts out. Another stock that has been in focus today is Cyient DLM. We spoke to the management earlier, and I just want to pull up the kind of up move that stock has been showing. A good quarter. They're off their day's highs significantly, actually. Touched a 780 rupee price at one point. But nevertheless, the outlook seems fairly positive. Listen in to what the top management of Cyient DLM told us.
This quarter, and even a lot of this fiscal year, we did have a very high percentage of aero and defense business. And this is a core. It is a core competency, and it's an area that we excel in the industry at. Now, we have had a higher percentage in medical in prior years, and we see that shifting where we expect medical and industrial segments to start to gain larger share. And so, we are quite happy, to be honest, with the concentration in aero and defense, because those have been very good sectors in general, and the outlook for those sectors remains very strong. So there is a focus to diversify, but we're not shy about aero and defense being a prominent area for us.
Well, Cyient DLM certainly showing that growth, 4% higher in the session today as well. So, or rather, post the number. So, not bad going really for this stock. What else? We've spoken about stocks which have gained quite a bit. Also imperative to try and highlight some which have lost out in the session. So aside of Vodafone, there is MCX, which is down 5. We've spoken about Tata Consumer and Tata Elxsi, of course, and ICICI Pru, which has stayed sluggish. The one that is surprised me is Exide, because a lot of smart moves, and then off late it's kind of given way. Vijay, not on the charts, but fundamentally, have you looked at the battery business of Exide?
Well, you have actually cut me short that not on the charts. Definitely, it looks expensive. But yes, Exide has been consolidating for years now, and we have not seen a breakout in this company. Battery business is definitely going through a lot of transition. Today, we heard that Reliance is also coming into battery business. Now, lithium ion, to my mind and to my understanding, is going to be history in some years. And the world is looking at newer technologies, and maybe sodium ion or maybe other technologies which are not as harmful as lithium ion, because if you lithium is a rare earth metal, and if at all you want to excavate lithium, you need to excavate tons and tons of earth, and you get a very little output. So I think that over a period of time, this entire battery business would go through a lot of transition. Reliance has acquired some companies in UK. New technologies are being worked on. So I think that all the companies, the bigger ones, whether it's Amara Raja Energy or Exide or maybe Reliance, these companies would come up with newer technologies, and they should be ready to to actually they should be nimble-footed, embrace newer technologies. So yes, I think that for the next few years, lithium-ion is here to stay. But yes, I don't see lithium-ion beyond say 5-7 years, and newer technologies would definitely come in. Exide, after a long consolidation, it has started moving up. I would say that if it corrects, get into the stock, no fresh buying at all. But yes, this entire battery business is going to see a lot of action in the next 5 to 10 years.
I just want to pull up Amara Raja. Remember, there was a EEC segment PLI announcement that was made, and you had Amara Raja, among others, that were the bidders for it. Reliance was there, like Vijay was saying, but so was Amara Raja. The stock is slightly down, opened higher, but has cooled off intraday as well. Exide was not on that list. That may be one of the reasons you're seeing some weakness. Jay, on the charts, what about Exide?
Yeah, both Exide and Amara Raja, I've been bullish for the last 2 weeks, and right now I'm not as bullish as I was 2 weeks ago. The move has been quite vertical. Definitely higher highs are still pending, but now I would rather trail with existing positions rather than create fresh positions. Fresh positions come up to somewhere about another 5 to 7% or 5 to 10% decline. But in this cycle, we probably have just one more higher highs to come through. So with that in mind, it's a trading bet rather than an investment bet.
All right, so it's a trading bet more than anything else for Exide and Indus. Just a quick call on Cipla, Jay, because Cipla has been the top mover on the Nifty this afternoon. There's an Investec report which has initiated coverage, and that perhaps is showing the move, even though there's not too much optimism on how their quarter will look. But that stock nearly 3.5-4%. We'll show that Cipla chart again. Jay, do you like a Cipla right now?
It's an ambivalent. No, if it were to take out 14-16, I would think that the correction that we saw from March is probably is a pause to refresh. But I'm a bit cautious here. It can go either way, but I'm trying to be bullish on the pharma names. I suspect 14-16 will get taken out. If 14-16 gets taken out, I believe 15-60 is on the cards. So conditional. It's starting to do something bullish, but I've still not got the confirmation.
Biocon is the other one that's moving, and since you said you're bullish on pharma names, you should just quickly pull up and see what's happening with the Biocon. No clear news spike for today that at least I spotted, but Biocon doing well. Vijay, any of the pharma names you like, and are you tracking a Cipla and a Biocon?
Well, I think that Cipla is much better placed. I was just going through the numbers, and they have done a stupendous job as far as the TTM numbers go. From March 23, they're showing a upside of about 2,000 crores. And even in the net profit, they have gone up by about a good 900 crores. EPS has also gone up from 34 to 45.93. So all the ingredients in place, the charts look wonderful. The numbers are very good. Cipla is one of the largest players, especially in the respiratory market. I think that Cipla should do well, can be bought into for a target of 1,500 plus. So definitely a buy and a very strong stock. Number two, whenever we see markets touching new highs, the money shifts towards conservative sectors. As I said, that FMCG, IT, I feel should do well, and so should pharma. The dollar index is also pretty strong. So all the exporters, whether it's IT or pharma, they should be benefited with the strength in dollar. So Cipla is a good company to buy into. Biocon, I would say that it has moved up quite a bit. Wait for some kind of correction. And I think that, some big funds are also buying into Biocon. This is what I learned from the market hearsay. It has been into a consolidation mode for a few years now. But yes, one of the best players in the statins and the biosimilars market. Biocon should do well over a period of time. Wait for a correction. 260, 270 is a good level to get into.
All right, Biocon looks promising. Jay, what are your BTST candidates for today?
Yeah, there's so much choice today.
You can give us more than two. It's okay.
It should be actionable for your viewers. I can't just flood them with so many things. So we had spoken about Linda India in March when it was about 5,600. We expected it to touch about 7,200. Today it's trading at 8,100, and this is looking like a good BTST. Just a call for the short term. As long as this can hold about 7,800, it's good for more. Probably tomorrow morning we could see something like 8,400 to 8,500. Yeah. So, but it's not since it's a high price stock. I might want to give Cipla as the next BTST. So a stop loss at about 1370 for BTST tomorrow for a smaller price stock.
Both of you, thank you so much for joining us and giving us your views. Really appreciate your time. And before we start wrapping up the markets in today's segment of How Rich Is Your Candidate, we bring you the wealth details of KV Reddy, BJP's candidate for the Chevella Lok Sabha seat. Alex Johnson with the details.
The richest candidate so far in the Lok Sabha elections is Konda Vishweshwar Reddy. And we'll tell you why in just a short while. But before we start, take a look at his earnings, his taxable income in the last 5 years. Now, he reported a taxable income of 4.65 crore in the year ending March 2023, and that's an up move from 2.14 crore in FY19, but it's been up and down. It's gone as high as 21.45 crore rupees in the financial year ending March 2020, and it's fallen as low as 1.14 crore, but it has never fallen below 1 crore in any one of the last 5 years. Let's move to the movable assets. And here you have to look at both KV Reddy as well as his wife Sangeeta Reddy. This is cash, by the way. So he's got 6 lakh of cash and Sangeeta Reddy's got 3.8 lakh of cash. But let's move to the movable assets. KV Reddy's got 1,178.7 crore rupees and Sangeeta Reddy's got 3,200 crore rupees of movable assets. Now, we find out why in the next plate, because you have KV Reddy who owns Apollo Hospital shares worth 973 crore rupees, which accounts for a bulk of his wealth. And in the next plate, you'll see that Sangeeta Reddy owns as much as 1,500 crore of Apollo Hospitals. And that's because both of these individuals are promoters of Apollo Hospitals. And a bulk of their wealth, therefore, is held in those shares. KV Reddy's also got certain unlisted shares, several, but I've named the major ones. He's got 100 plus crore in Citadel Research and Solutions and 40 plus crore in Healthcare India. And he's got also gold of 60 lakh rupees. Sangeeta Reddy holds a much larger amount of over 10 crore rupees. And immovable property, KV Reddy holds commercial buildings, residential units, land of 71.35 crore rupees, while Sangeeta Reddy holds as much as 5.5 crore. Well, that's how it looks. And in fact, this is by far and away the wealthiest candidate so far in the Lok Sabha election.
Well, if that was enough to get yourself elected, wealth does help fight elections, but it's not nearly enough. Meanwhile, a good day to make wealth in the markets today, I would say, Niraj. You're coming off the highs, though. Pull up the Nifty intraday. You're looking like you might have a bit of a pain towards the end. Yeah, a bit of a dip towards the end, but nevertheless, the markets, I think, have held up fairly decently.
Yeah, and then the bank's still holding forward, I would presume. Let's check the Bank Nifty. The fourth day on a trot now that the Bank Nifty is held out well, so which is actually a good sign. For the large caps, let's just get the contributors list and just show you what's really led to either the pullback or the uptick. So Reliance, TCS and Bharti Airtel, which has been on the gaining side for all the last few days, is down in the red. On the flip side, Bank Nifty, no surprise with Kotak and ICICI doing what they're doing. And HDFC Bank not sulking too badly. I think that aids the Bank Nifty for sure. But I think the more important piece is this. Tata Steel is not a heavyweight by any stretch of imagination. For Tata Steel to contribute to the Nifty gains today tells you a story. And therein lies the story, the broader markets are with one now. Metals, zooming of the chart.
All about the metals. A CLSA note upgrading its outlook on metals may have helped. The index is up 2.5% on a day of otherwise very, I would say, tepid moves, lukewarm moves is another word I would use. Perhaps nothing great happening there. IT is hurting the most on a relative sense of the term, but it's all about the metals today. Some stocks which really come to mind, and we should just quickly pull up the heat map as well to see how the Nifty is looking like it will end at the end of the day. I'm guessing Tata Consumer is still somewhere at the bottom, 5.5%. Actually, quite a steep punishment at the end of the day for numbers which were not in line, but were not that ghastly. Perhaps I want to see what HUL is doing, because HUL numbers coming up, and not looking too bad so far as an HUL.